Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him. Philippians chapter 4, verses 6 to 8. Do not be anxious about anything, but
Yo, good morning, everybody. It's almost a new year, right? Sorry for the wait. But hopefully you guys have had a good weekend. Hopefully you guys have had a good year. Seems like it's going to be another pretty chaotic year next year. So we're going to have to see what happens, right? But this call today, similar to how, we normally do things, we're going to still do a lot of the components, kind of see what could potentially happen the next couple of weeks, going into this next week especially. But there's not really, there's some stuff, but, it's another bank holiday type of week. It's literally the end of the year. Generally, the fourth quarter ends for the current year. 100% it does. And for the current year, December 16th, right, which we've already done the rollover. We're already in the March contract for the coming year. So with that being said, we got to consider that because we're at the start of the new year, basically, we got to think power three, okay? The next couple of weeks, kind of could be hit or miss. November, December into January generally has a lot of cracks and correlation. So, we've been able to witness that. I called it before that was going to take place. I mentioned it, and we pretty much saw that throughout the whole entire, 2-month span. So money has changed hands. There's a lot of positioning for the new year. Again, it's a holiday week, and it's basically the start of next year. Smart money, I'm sure, if you were smart money, but smart money, I'm sure is on the sidelines, just like how we would be if we had, multi-millions of dollars trading at that type of size. So you got to think about that during the holidays because that's just the facts. When you're a professional in this industry, you're not ball and chained to the market. So because that's the case, because I'm assuming that smart money is on the sideline as they are generally for the holidays, which ends up making, it makes the volume a little bit less reliable. And the precision elements a lot of times are not necessarily present. Those of you that have followed this channel all year, even if you just joined this month, you've seen I've been able to call the market, right? And then specifically, we had gold. I called 4,500 the week before last. Last week, right at the start of last week, I called for potentially 4,500 to be targeted for gold. And it's ironic that we basically went right into it, right? And then we had a bunch of holidays and whatnot. So, one holiday, Christmas Eve, looks like, we ended up hitting it right on Christmas Eve. And then Christmas Day, the market was closed. And you can kind of see how price doesn't have the candle for it. Kind of merged it into the Friday candle. The Thursday candle was non-existent because of the holiday. So the overall sentiment basically, was pretty accurate to the tick. Of course, it blew past it a little bit. It's funny too because I'm not sure if you guys, those of you that are into politics or people that talk about politics or world events, but Tucker Carlson had a person on for an interview that, in my opinion, he'd be classified as part of that smart money view, like part of those people. Not that they generally trade, or he kind of thinks makes it seem like he is part of that realm of things. Doesn't trade what we trade, but he does the whole retail thing and whatnot. But he's a large fund manager, and he's very insightful. I recommend that all of you guys go watch that latest interview. It has a gold Trump head on the on the thumbnail. But a lot of what the guy talks about is very interesting because it lines up with most of the things that we've assumed in terms of the trade for gold, just the overall condition of the financial world in the U.S. and across the world. And essentially, as we were calling for certain things to take place in the market, it was aligned with the thinking that these people had. So we were literally proven by what this guy said on the same side of smart money, basically throughout the whole entire last couple of months, pretty much the whole year. Because I remember I called the low of the year, and we traded from that point. I called it lower, targeting that level, which was the 1 year order block. And then once it hit it, it ended up accelerating aggressively, and we were just accurate throughout the whole entire year this year. So it's a very interesting thing to see these high level financial firm managers basically be on the same side as us. Like he said that the gold and silver trade they called out well beyond or well before 2,500. Basically, at the start of the Ukraine war, they were talking about this, right? And just to hear that confirmation is very interesting. More than anything, it's interesting because it just shows that what we do here is high level analysis. And I, of course, keep you guys updated with financial things that happen, tariffs and all those things when it's necessary. And it seems that we've just been straight on the money with, the research fundamentally to the technicals. So again, those of you that have been with me all year, hopefully you guys have learned a lot. If you go watch that video, you'll see the video that I'm recommending just to go listen to, because he discusses a lot of things about the economy and different drivers, how things impact certain things, what can be expected. He talks about traders, right, versus investors. I just think it's a very insightful video. And those of us that are in the financial industry, I specifically think would find interest in it. There's not really any politics that's talked about, really. There's a little hint here and there, but just you can kind of ignore it, if you don't like listening to political things. But I think it has a lot of insight that is valuable. Okay, so definitely go check that out. But again, it's basically a holiday week, New Year's. So again, people are on the sidelines, but we can continue to think about is power three. Just because it's a holiday doesn't mean that things aren't present, aren't working or aren't going to work, or opportunity is just not going to be there. It's a time where you got to be very cautious. I would not go into the next year over trading and over leveraging. Okay, I would not be doing that because the likelihood of a rapid repricing, unless it's in something like gold, is pretty unlikely. They're positioning, getting set up for the coming year. Excuse me. So we got to also be doing the same thing. All right. So one thing I do want to pull up, if it will allow me to pull it up. I don't know why my Discord is being stupid. See if it could load this up. We're going to talk a little bit about seasonality today. We're going to talk about, different ways to prepare for the coming year. If I can get the things to show up, that would be great. So let me pull up. We'll start with the seasonals first. Because we're going into a new year, it's the end of the month, right? It's the start of a new quarter. Power 3 is going to play a role in the yearly perspective. The new yearly candle is going to unfold. Go to this. See, we haven't had the new candle form yet, at least in the chart. So we'll see if that populates after New Year's. And then you'll basically mark off the open price. Okay, you want to always mark off the open price for the year. Obviously, it's a yearly candle, a yearly range, so it's not something you'll be dramatically referring to. But, it's going to be important because if it's going to be a bullish year, they're going to spend time below the open price. And that could be, for a quarter or two, right? First quarter is consolidation manipulation. Sometimes it bleeds over into the second quarter, but the second and third quarter can generally be looked at as expansion portions. Third quarter can kind of be a little bit chaotic, but then it picks up for the fourth quarter Christmas rally, which you see pretty much every year. The reason the third quarter could be a little bit of a problem is because it's right smack in the middle of the summer months, right? And the summer months could sometimes be a problem, which is something we highlighted this year and, participated in and also saw validity to what it is that I'm mentioning here and have been mentioning, which ICT teaches as well. Okay, let me see if I could find what I'm looking for. Where is... Okay, so let me see. Whoops. So yeah, let's actually pull this up real quick. So here's the US dollar. All right, so we see seasonal influences for the US dollar. The start of the year is a bit chaotic. Each of these lines is a separation for the quarters. So the first quarter for the next year begins here. So first quarter rolls into the second quarter here. And you can see all through here, it's a bit chaotic, a bit nasty to start the year. That's generally the case. And then, of course, there's somewhat of a low that forms and then potentially a rally. That generally makes sense for the yearly perspective. When we start the year, if we're thinking of Power 3, if we're going to have a bullish indices market for the year, this makes it make sense for the accumulation, manipulation phase of that start of the year going into the second quarter, right? And if we, let's actually minimize that. So with that being said, if we go ahead and try to find where the indices are at, we can kind of see that there is a reverse reaction going into April, right? Or going like headed into April. So January, February, sometimes can be a little bit sideways, right? Going into April, we can clearly see that all three of these lines submit to downturns. So that's a slight expectation that you can have. And then, of course, ICT has this phrase where he says, sell in May, go away. So you can kind of see April, May, and you can kind of understand why he says that now. If you've never looked at these things, or maybe you've never heard him say that or talk about seasonals, these quirky little things that he says, if you take what he's saying and go to use some of the tools that he mentions, like this here, and you just look at the relationship between the seasonal influences, between the 5-year, 15-year, and basically 30 years, and whatever's populated on whatever chart you're looking at, you can kind of see why he says sell-in may go away, and you can kind of see how there's like a low that forms, right, and then there's a high that forms, right, between these three averages, basically the time averages. Okay, this says DJIA. That's basically the Dow. I don't know why they call it that, but it's kind of the Dow. If you look at any of the seasonal influences, they're between the indices, they're pretty much all the same. They follow each other, essentially. They have a lot of the same assets, same response, basically positively correlated. So if you go into these, you go into these tools and you look at the three lines, you want to observe the highs and the lows that form that are followed by agreement with all three of the lines. Like this low here, right? There's an agreement there between all three of them, in like mid to late January going into February. And then, of course, you see that downturn. And like I said, if you go to the DXY, okay, we pull that up. If I could pull this back a little bit, we can see the opposite view, right? We see a pretty rapid response going bullish, and then all of a sudden, you see a pretty nasty decline going into April, right? Well, a rapid increase early on, followed by a rapid decrease here, right? And of course, seasonality is not perfect. It's just a average of what happens. There's actually another resource that is shown here. If I could, oh yeah, this here too. This is what got me to think about the yearly Power 3. Okay, ICT literally explicitly has said on Twitter, on X, whatever you want to call it, he's literally talked about it, right? Power of 3 on a yearly perspective, right? And this was a long, long time ago. I think this was in like 2018, 2019, I think. I can't remember exactly when I got this screenshot, but yeah, it's clearly depicted from ICT. So there's clearly something to it, and it's something you should think about getting better at understanding. I talk about this all the time in my private group. These are the types of things. But let's go see if I can find. See if I can go find the image. If I can't find it, oh, there it is. So this is something you can look at, where basically ICT, in some of his content about options, basically talks about seasonal influences. Okay, and he kind of does the rough analysis for you on this one asset for the indices, and he kind of lays out the list, right, of what the seasonals should be or could be based on what he has studied. And for the most part, this stuff is, pretty solidly accurate, right? It's not going to be perfect. It's not going to be a be-all, end-all. But again, it's just something to help you build that anticipation skill going into each month. And, it kind of gives you just the characteristics and what to expect. So again, why is this important? Why am I spending time on this? Because it's the end of the year. And there's a yearly Power 3. And there's seasonal influences that you can look over, which are highly accurate, right? Like some parts of the year are highly accurate and consistent. And I will honestly let you go do your discoveries to find that out, which quarters and which months have the most likelihood or the most repetitive cyclical nature throughout each and every year relative to seasonal influences. I'll let you go do that, analysis for yourself so you can, benefit from it. Not just by me saying it, but you actually going in and doing it. It's better for you to do that. But I'm basically pointing you to what you should be doing, right? I talked about this before. Seasonal influences, I use them every month. I talk about it, here and there in my private group. But this is just part of what assists me in the yearly clarity that I have and my expectations for each quarter, the characteristics that I've studied over time, what is the most repetitive, and which months lead to what months should lead to specific repetitive types of price action. Okay. And again, this is a very good list, very good, breakdown of it, of all the different components and what generally happens. And you can simply take the last 10 years, go look at it, or even the last 5 years. The longer time horizon that you give yourself in terms of the study that you do on this, the more clear it'll start to become as far as characteristics per month, per quarter, and how the yearly power three unfolds, right? So you could look at this from like the 8 hour or 4 hour chart. You could look at it from, the daily chart and just outline each and every year and study the January 1st moment, right, for your open price, or maybe the second because the market's closed on New Year's, or just wherever the newest candle forms on that next year. You draw that line out and you can start to study power three. This is obviously a study that most people don't do because they are lazy, okay, but they expect crazy, spectacular results. In order to be accurate and highly effective in the market long term, reliably, so you can like do things like quit your job, which I don't guarantee, no one can. It's up to you and what you put into it. But the only way that you can achieve these high levels of understanding and effectiveness as a trader that's not similar or that's very unique in terms of performance, it requires a high level of understanding. Just like how a doctor that gets paid, top level wages, they're not just some rinky dinky homeless guy that popped up and read a medical book, right? They're not just some, random person on the street that has just like looked into a little bit of stuff. They're highly specialized professionals that know everything that there is to know about their industry. It's the same for all industries, and it's no different in this industry. So if you see these people that are smashing it, they have a high level of understanding, and if, it looks too good to be true, most of the time it is. If they say that you can do it in, 5 months, right? You could buy a Lambo next week. It's fake. It takes a lot of work to get to a high level as a trader. Not only technical work and understanding of the markets, but also mental work, and, in terms of the technicals, this is one portion of the process that we operate with to be able to have this high level of anticipation, which again has been proven all year and in my private group for the last 3 years here on this in this community as a whole. So at this point, tools that are used have now become undeniable in terms of the process, how we mix them all together, and ICT concepts as a whole. It's just undeniable. So you shouldn't spend too much time thinking about these things. What you should be spending time on is researching if this stuff is applicable to you. Not everyone uses this. Not everyone uses like COT and some of these extra things, because if you try to use that stuff too early and you don't have like the baseline technical understanding, and you don't have enough experience to understand that not everything is used at every single moment in price, you could feel overwhelmed and use it once, see it doesn't perfectly align, and then just discount it because your experience using the tool or just experiencing the tool in play and when it works, when it doesn't work, is lacking. So that's most of the time why people don't even refer to these things. And again, it's not something that will change everything, but it's just another element to build clarity, and you can have that trust on your side. When you see that there's like a heavy bullish seasonal influence, for example, and you're trying to determine whether the indices are going to keep going higher, if you have this seasonal influence behind you, whether you're in a downturn or a bullish trend, it just adds that extra level of fundamental awareness and trust to the fact that, retracements lower going against that bullish trend are most likely just that, They're just retracements. I'm not going to sit there and demand that it runs 1,000 points to the downside if it's just simply in a retracement in a bullish trend with a bullish seasonal influence that, hopefully has a clear target that we're reaching for. I wouldn't want to put all my eggs in going short in that instance. You know, it's the same if you're going to the downside versus bullishness, you know. So hopefully this makes sense on how this could be useful. Hopefully the expectation isn't set too exaggerated, right? Like it's helpful, but you have to know how it's useful, right? You have to know how to use it. And hopefully, being part of this community has helped you guys understand some of these tools. I talk about this stuff from time to time. And of course, I have all these resources in my private group. I got a whole section about it, basically talking about it, sharing different things. I've done this for years using this tool. You can see from 2021, I've been using this since then, So, and I also give the seasonal charts to you guys so you can use them. And again, we talk about it from time to time as well, just for amplification. But again, you don't have to have too crazy of an understanding of this. The most important thing is how to look at it, understanding the different tendencies for different parts of the year, how that can assist you, and when you shouldn't be using it, right? And that comes with time and a little bit deeper explanation as well. But if things are just not in alignment, that's also telling you something. If you have a bullish seasonal influence and price is consolidating or it's going lower, that's telling you something, right? It's telling you that you probably need to put it to the side or maybe wait for price to get in line with the seasonal influence. Maybe it needs to reach for a PD array before the seasonal influence can accurately kick in. Sometimes that happens. And again, it just goes back to the statement where not every moment in price is a moment to take a trade. Sometimes you got to wait if you want high probability. And, using this tool is no different. Because I see I know. I see the Trading View put that too. I haven't mentioned it because it doesn't show what we need it to show us. Like the chart that I just showed you guys, that has the exact data, right? You want a couple different references of time, not just years, right? The resource that ICT uses, which he has said publicly, so I might as well say it publicly too, is MRCI. And you go there, and that's the absolute best seasonal influence resource that you can possibly have. I completely agree with that statement that ICT said, and I don't use anybody else, especially not TradingView, if they're only going to offer such a limited amount. MRCI, absolutely. He has like the best of the best, and it's very, very reasonably priced. You just literally have to purchase it, go and download the ones that you need to download, do what I did, and take a video. Of course, I have these in my private group, kind of just comes with the community. But you just basically go in there and then just screen record, and then scroll through, and then you can kind of secure video and screenshots of the things that you need. Seasonal influences do not change like dramatically. Maybe over a 10-year period they might, but they don't necessarily change. So you don't have to worry about, if it looks a little bit different. The bottom line is the characteristic, not exactly what the average chart looks like. What is the characteristic? Is it bullish or bearish? And what time of the year is it? And how many of those references, the 5-year, 15-year, 30-year, sometimes it has even higher time window, but how many of those are agreeing? Where are the highs and lows that lead to all three of those lines agreeing? Like what time of the year are these things unfolding? What quarter are these things unfolding in? With these characteristics. And then you take that study and you go back through the last 10 years or more, and then you can determine, based on the asset you're looking at, which seasonal influence operates the most consistently over years. And then, of course, you could take that study, that information, and that will be helpful for you for the rest of your career. Because now you got an anticipation based on actual data, actual time, and the simple fact that there is a seasonal influence, seasonal impact that happens in the market, right? There is a very common repetitive characteristic that takes place when it comes to seasonality. And again, I can say this, I could say anything, right? The only way that you're going to really be able to verify this and whether you're going to want to be able to use it is when you take this information, go put it to the test, do your own studies, build your own, portfolio of seasonality studies. You can do the same thing for COT as well, by the way. And then you just carry that on through the rest of your career, and you'll see it every year. Well, this is what the seasonal says. That doesn't mean that I'm going to go in there and buy just because it's a bullish seasonal influence. You take that seasonal influence and you add it up to something that's in the market, right? Like, for example, if we see that price is reaching down in the NASDAQ going into a new quarter or going into a new month, and it's reaching down in a bullish trend overall, but it's reaching down to a higher time frame PD array, and maybe you see SMT at that level forming, the seasonal influence is going to absolutely manifest like gangbusters. It's going to blast, especially if the seasonal influence is agreed upon the three averages that you place on top of one another from those charts. And then historically, you've seen that this time of the year sets up, a bullish move. That is how you properly use seasonal influences. Now, with that description and tactical use case, does that seem like you use seasonal influences or any of these other fundamentals every day? No. You could look at it week to week like I do, or even month to month, just to get a feel for what could be the expectation. And so you go in with, a little bit more information than anybody else. And then a little bit more trust when you see it kick in, and a little bit more trust as you do this study and see this stuff play out. And basically prove to yourself that there is something to this stuff, and it is useful. I see a lot of dumbasses on the internet saying that this stuff doesn't work. They say, oh, seasonal influence is fake and all this nonsense. It just clearly shows that they've never used it. Maybe that's their opinion. Maybe it doesn't work for them. Big part of that reason is because they don't use it correctly. They've never had someone teach them properly. And of course, there's a lot of ICT haters on the internet. So of course, they'll just take anything he says and, just hate him for it. And it's just stupid. So and it's very easy for a new trader to be thrown off by this type of stuff on the internet. That's why I have a YouTube channel, because I try to stop those things from penetrating the bloodstream of traders that are in the ICT community. And, I don't have that big of a following, so I can't really make much of an impact. But those of you that have been following me, those of you that have seen what it is that we do here, how accurate it is, how provably reliable this stuff is, the performance that I put on display, trading live, pointing out opportunities, and then the students that have come out of my community that are now blasting, getting payments, withdrawals, consistently passing funded accounts. I mean, it proves that there's something to this stuff. And that what's being said here, maybe not everything is going to be used by you, but it's definitely something worth listening to, and going in and investigating on your own. And hopefully it's protected you guys from some of the stupidity on the internet. There's a lot of loud idiots on social media in every category of content, every, sector of money making, or just technical analysis, So yeah, hopefully, you guys are, if you're new, hopefully this kind of opens your eyes and gives you a different perspective, but then also kind of highlights certain things like seasonal influences, like COT, and why they're important and how they can become important. Because COT is also used in a very similar way, right? If you're seeing COT promote that it's bullish, right, or there's more offloading of short positions, right? Basically, they're looking to buy. Then you just go into the chart, take that information, look for what price is doing overall, and see if a scenario can potentially be painted like this one, for example, going into a bullish order block. Price was overall bullish. Other assets agree. Seasonality potentially shows a bullish seasonal influence. That's basically what happened here. The explanation that I'm telling you here about seasonal influences, how to use it, it's literally justifiably used here because of the Christmas rally, the seasonal influence being heavily bullish, right, towards the end of the year. And you can see it beautifully unfolded, right? Just this example alone shows you one of many examples you can pull out, proving that COT, more so in this case, seasonality, when in the right circumstances, works out flawlessly. What does that mean, the right circumstances? So I'm not vague. Prices reaching into a level that can react. And the structural overall view, intramarket relationships agree. Everything's in agreement with the possibility of a bounce to the buy side. If we can just acquire liquidity or a PD array, that would make sense for price to want to move to the buy side. And you can beautifully see that here. That's another reason why when this changed state of delivery above this order block, I was highly confident that we were not going to continue to go lower, and we could trust that it was going to push higher, especially off this response, which I've talked about in great detail, when I discussed this move a couple weeks ago. Okay, this is just something that I didn't hoist upon you, because most people don't really use these things. They're not interested, which is unfortunate. But those of you in my private group, I talk about this stuff all the time. It's not an everyday thing that you use, but like I said, every month, maybe every week, you want to know what the possible seasonal influence is telling you. Because in moments like this, in moments where something happens, like a shift or a change in state of delivery happens, if you're unsure, this is another element, aside from all the other things that we talk about, that amplifies your trust and belief in that move continuing, right? And then kind of shuts off the doubt, at least shuts it off more so if you didn't know this information or have this information. All right, so I do want to, before we move on, I want to ask if you guys got any questions about anything in particular. Today's, again, going to be heavily weighted towards answering questions. I'll go through things pretty quickly and try to decide what I think price is going to do. But for the most part, this last call is, to try to prepare you guys as much as possible. Like I've said the last couple of months, from November. In December, it's going to be a lot of trying to get you guys prepared, actually like prep you, let you know what I look at, how I start my years, and what you can use to build an expectation and a pretty solid anticipation skill before the market even prints the next year's candle. Right. So yeah, do any of you guys on this call so far have any questions? Fancy, good morning, brother. Appreciate you for hopping on. But yeah, if there's anything in particular, I don't care what it is, about whichever piece to the puzzle you may be struggling with, I'm open to answering any questions. Because I want to get you guys prepared. That's the whole point of this community, So, but yeah, hopefully, hopefully you guys don't have too many questions. If you don't, then that just shows, if you guys have been with me for a while, that pretty much shows that I've been doing a pretty good job. That's the best testimonial out of anything. Students watching your content, hop on live calls and just have no questions about anything because it's, everything's kind of known already. All right. So, yeah. Tony said, mine's waiting. I have a question, but we can wait till we are in the charts. Yeah. So again, just like every week, think of Power 3. It's a holiday week. Our risk is cut. It's been cut since November because of the fourth quarter behavior. The holiday schedule, how smart money is most likely just off the charts. They're not even worried about it. And so just remember, think Power 3 every time you look at the news. Accumulation, manipulation, distribution. Remember the days characteristics inside the weekly range, what role they play generally. Look at the news events that align with like red folders, what day they form, what time they form, right, or what time they're coming out, and then just think of Power 3, right? And you can take it even a step further and then think of weekly profiles, daily profiles, and you can kind of add that to this understanding and just walk forward with it, right? So yeah, with that being said, let's jump to the chart. So Fritz, if you have a question, I'm open to answering it. Tony said, I made a lot of progress, and 2026 will be, yep. Hey, I agree, brother. You've passed funded accounts. You've proven to yourself that with discipline, doing things correctly, not over trading and over leveraging, that's where the good results are. Because you guys get process from me. I do my best to get you process, at least, in the best way that I can, given the 2 days that I'm live. From these prep calls to that one live call, one live trading call. So hopefully you guys have been able to pull a lot of value from all the videos. I jam pack a lot of stuff in these videos. Of course I answer questions and do all these things. That's why it's so long. But the overall process, hopefully you guys have been able to identify that it doesn't take you 5 hours to do or even 1 hour. It doesn't even take you 30 minutes for the most part. Once you understand the system, the process, intermarket relationships, what we look for, what liquidity is important, power of 3 for the week, what could be expected, higher time frame PD arrays, validation, invalidation. Once you understand most of these things and some of the other elements that we maybe touch on here and there, you could hopefully have a process. Hopefully you guys all feel confident and feel like you have a process that's repeatable. And hopefully what I've shown this year and all the times that it's just week to week nailed our target, last week not even being an exception, right? I literally called 2,500 here on gold, and it smacked right to it a couple days after I said it was going to go there as a target. So even to the very last week's call out, right, the last portion of the year, it's just continued. It just continues and continues over and over and over again, So yeah, I'm glad you made a lot of progress this year, Tony. I look forward to seeing where all of you guys take this, and welcoming any of you guys that do want to be live with me regularly on like a 6-7 days a week basis. I can't even remember a time when I took a day off looking at the chart, even for holidays. I was even live with my private group on Christmas Eve, so that is the length that we take it over there. So yeah, we welcome any of you guys that do want to come join us live. The one-on-one element of things is closed until the next quarter. I have too many students in that realm of things as it is. Multiple Zoom calls every day. I mean, it's exhausting, but I want to get people to succeed, or at least get them to be able to succeed on their own, not just by following me. That's the goal, right? And I want you guys to be able to stick with me in my private group because you want to, because you like the environment and you want to maybe do the same thing I'm doing, provide value to those that are in that community and lift up your fellow man or woman, so then we can have a more prosperous world, So let me see. Buy me thanks, Chris. On our call from Wednesday. Oh yeah, I did a call on Wednesday last week because I had a long one-on-one call with one of my good friends. I only, after our call, saw Nas had a 4-hour order block that price pulled into nicely. My question is, between the wick of the 4-hour and the body, it fit in perfectly with the low. Question is, between the wick of the 4-hour body fit perfectly. Looking back, I can see I could have used it perhaps. Wait, so what specifically is the question? I don't think I understand the question, brother. I don't think I really understand what the question's aimed at. When do you use a body close of a bullish higher time frame candle? The body close of a higher time frame bullish candle. When do we use it for what exactly? And when do we look to include the wick to note an order block. So you always want to include the order block wick, always. It's just once that open price is breached, that's when the order block turns on. Or basically, the way that we look at things, once the open of the order block is traded through, doesn't matter which one, bullish or bearish, that's the trigger telling you that that order block is now in play. And the wick, the open to the wick, if there's a big wick or even a small wick, that is the most highly sensitive area, and it can go all the way as far as the 50% level of that order block. I don't care what time frame you're on; it's the same on every time frame. So that is essentially some rules around order blocks. The consequent encroachment in general across all the order blocks or any other PD array, that's your line in the sand. And if it goes beyond that, it's less likely. And a lot of times it will fail. And the consequent encroachment of the order block is measured from the body high to the body low. I don't use the wicks because, again, the wicks are the manipulation. The bodies tell the story. So to accurately measure out the 50% of the order block, you want to use the body in general as a whole. And that'll be your range to find consequent encroachment. But you got to use the wick when it comes to price trading through an order block, right? Like this, for example. It's probably not the best example. But if you take like this, for example, here, and price trades right above that, it doesn't necessarily even have to close above it either. It's better to close above it, but you can see it doesn't always have to close above it, and it's still valid. This kind of just knocks the socks off of anyone saying that you need a closure above. It's good to see a closure above, and some people prefer that. And if that's what you prefer, don't let me take you away from that. But I personally, the way that I look at it, and just the way ICT teaches it, it doesn't require a closure above. Some people may require it. I don't. And you can kind of see in this example why that is. Right when it breaches that open price, it's now activated. And how do we know this from this picture? How can we determine that? Right? Well, once price breached the open portion, it did go pretty aggressively through it. But once it breached that, it closed back into it. Okay, great. Now that that's activated, the 50% of this order block should not get closed back through. The wicks can go through it, but the 50% of that order block should not be traded through on a closing basis, right? Once it breached the high of that, right, did it respect the 50% on a closing basis? I would say so. Right? So yeah, I hope that makes sense to you guys. This is something that most people probably don't even understand about order blocks. And order blocks are simply a change of state of delivery. Not every single down candle is an order block that's usable. But you still want to look at them as speed bumps, with a larger context as well. You don't just look at a down candle that gets traded through and think, oh, well, it should go higher. No, that's a part of the context. What the bigger context, like, underlying, like where price is going, and then some of the other layers like intermarket relationships. Like I mentioned, seasonality can have an influence as well if you're looking at it from the higher time frame. And then some of the other contextual ideas allow you to have more trust in whether something should hold or not. And then, of course, if there's like SMT as well, and then we breach through it again, right, or breach through the order block, leaving SMT, that's another reason, especially if the SMT is at like a logical level. And you want to be on those higher time frame levels because that's where the most dynamic moves come, right? They come from the larger time frame PD arrays and liquidity raids. Those are levels that are very sensitive, right? If you want to catch bigger moves outside of the 20 to 30 points that I recommend you catch, because it's the easiest low-hanging fruit target to capture. If you want bigger moves, which you guys see all throughout this year, I've literally called moves that went hundreds of handles, like most times. And it's because a lot of my framework is rooted in higher time frame reactive levels. If you don't have a higher time frame level that price is trading, like say you're trying to buy, and there's no higher time frame level that you can justify the response from, that execution may be, it may fail because it may be reaching for something that's deeper than what you chose to try to engage on. Even if you're in a macro, or even if you're in the New York session, it still may have to reach down or reach higher to get into the higher time frame daily, weekly level that it's reaching for. So a filter that I mentioned to my private group sometimes, and some students I work with on a one-on-one basis that deal with over trading, and when they get in, they get stopped out and all these things. First and foremost, don't take executions before the open price for New York. But secondly, only look to frame a setup or verify a setup is in play or could be in play or could form when we're reacting from or hitting into a higher time frame PD array. Generally, that first tap into it is going to be unreliable. If you can get a second tap into that PD array that you're looking to see a response from, and it holds that level, the odds increase exponentially that level is going to hold, especially if the underlying context is bullish. What I just said right there is going to go over most people's heads, and they're going to, they're not going to think nothing of it. When in reality, that's one of the most dynamic, useful things that I've been able to use over the years. And I gravitated to that idea early, very early, and I think that's benefited me throughout the last 6 years. You hear this little term thrown around, right? The higher the time frame, the higher the confirmation, right? And in certain contexts, yeah, it's true. If you're looking for a buy and you're trying to confirm that it's going to buy, right? You can use things like SMT on the higher time frame. But if we're hitting into a higher time frame level, right, and price is responding from it, that's a lot stronger than, say, the 5 minutes setting up the YouTube model to buy, just at a random point in the kill zone, or a random time throughout the day, especially, right? If you can couple whatever idea you have going forward throughout the whole year next year, only from higher time frame levels being either traded into, like this drop reaching into this, or when it reaches into that, frame something going higher. Once it fulfills that, you will filter out so many shitty trades. I mean, it'll be unbelievable. Okay. You'll be really shocked that this simplistic adjustment can revolutionize what it is that you're doing and get you in front of the right timing, for things to move. Sometimes it'll take a day or two to get to those levels. So what does that mean? That means that, you probably should chill out until it gets to those levels. Or if you become more advanced, like, me and my private group, you can start to frame things out going into those levels that you're expecting reactions from for counter trend opportunities, especially if this turnaround or retracement began from a higher time frame PD array. In this case, it swept the high up here and it came off the high. And then we broke down below this, basically looking to, target internal range liquidity before it went to external, So yeah, again, what I just said in the last, 5-10 minutes, it's going to go over most people's heads. Don't let yourself be one of those people. Okay. Because everyone that listens to, things like this, they start to see small improvements, sometimes dramatic improvements and less damage. Right. So let me look at the chat real quick. Far down, wick this damage. Do we include the fact that in this example, that 4-hour down candle had a push upwards? Which asset are you specifically talking about? Oh, NAS? Are you talking about the NAS with what you were talking about earlier? That was NAS. Okay, so 4-hour. Our down candle had a push upwards. So which 4-hour candle are you talking about? Are you talking about this one here? From Wednesday. I'm not too sure which down candle you're talking about in here. This one was from Tuesday. And NAS, I'm assuming because you labeled it as NAS, are you trading CFDs? Or maybe that, I mean, you could just call it NAS. Obviously, it's what it's called in general. If you're trading CFDs, it may throw off some of what things look like. The only down close 4 hour for Wednesday. You talking about? So Wednesday, there's no 4 hour down candle in here for NAS. For Wednesday, if we look at, this is Tuesday's candle. Wednesday starts there, 4 hour wise, and then it goes up to this candle. Yeah, the CFDs. Okay, so yeah, that's why it looks pretty different. So do I have those still labeled in here? US 100. Are you talking about this down candle? That's down candle on Tuesday. Oh yeah, so this one right here, basically. This is the issue with the CFDs too. If we're not looking at the same exact data, it may look a little bit different because it's very much something that follows. So that one, okay. Yeah, so this one. So yeah, price came down into it. What did it do? It respected the midpoint. Right when price got above it here, it's turned on. It's small, right? So sometimes they could be unreliable when they're that tiny. That's when you obviously want to make sure you're moving up and seeing, okay, where are we at in the bigger picture of things? And does that holding from that level make sense within the larger grand scheme of things? It looks fairly close, right? Fairly close to everything in the futures, which it should, right? But yeah, so let me go back and look at what you mentioned again, so I know. Could the far down candle, this candle had a push upwards that swept the high. In other words, it started a new range. Yeah, for sure. That's true. What you just said to me makes me says that the lower time frame will be a sweep of liquidity or a failure swing, but higher time frame will show second look into that for get. So yeah, it's basically the lower time frames are creating the story that's being shown on that higher time frame, right? So, essentially what we're looking to see happen on the higher time frame, it's going to begin or set up the initial stages on those lower time frames. But it's all coming back to what that higher time frame's doing. That's why it's so important on those higher time frames. That's why you cannot ever lose sight of those things. At least if you're listening to me, some people may have a different perspective because they just, trade the lower time frames. But this is how I see things. I look at things from a very wide array of view or wide, view essentially. I'm a person that needs to be certain, at least somewhat certain, because I have issues. When I first started, I had issues trusting things, and the uncertainty portion of the market, I had to figure out ways to try to combat that, at least in the best way I possibly could. And the way that I do things now, after seeing the performance I'm able to have, after seeing all the students that succeed or get themselves to a point where they're able to succeed on their own, it all just drives home the importance and effectiveness of what it is that we do here, and why it's all these different details and things that we talk about are worth listening to. Because it's not only me that's benefiting from the things that I share, the things that I've discovered with ICT's concepts and my experience. It's other people. It's hundreds of other people now, which is insane. And my channel's small. So imagine if I had, 100,000 subscribers. Imagine if 100,000 plus people were able to hear and be part of these live calls. That'd be, a good portion more of people that are actually understanding the markets in the way that we do, attempting to get some similar results, or at least their own results that are, at least in the realm of good and reasonable, so yeah. And is that one the wick? That's another nugget you said. Does it make sense in the large? Yeah, exactly. Very important. That was in regards to the example shown in high time frame gold. That's second PD array. Yeah, so if we bring ourselves back to gold, let me get back to my beautiful child, the NASDAQ. If we go to gold, that was in regards to the example showing gold. A second look into a PD array. Yeah, so that's secondary tap into it. The same thing can be said too about this here, right? This move in here. Okay, price got above it, right? It got above it here. Okay, great, right? That turns on the order block. So now my opinion would be, all right, well, because it peaked above that, if we're going to continue to trust that it's going to go higher, I need that 50% level of the order block to stay above, because that'll continue to give us a rolling observation that price, or the algorithm, right, is interested now in pricing higher, offering prices higher. Unless it breaks down through that from this time frame, this perspective, it's going to keep going higher. And then once we see this drop here that closes above the open there, I mean, all I needed was this wick to go down. And those of you in my private group, I mean, we talked about this. We went into great detail about this whole, delivery in here, because I had some students that were trying to, or they didn't really trust it 100%. And, we kind of went into reasons why, and, broke down the whole process again, and tried to make it make even more sense to those that are in my private group that were asking those questions, or that may have taken a short. I have 3 or 4 students that mentioned to me that they were trying to short this, and it was hard to trust for them that this was going to turn around and go higher, right? Part of it obviously has to do with my experience seeing this, in terms of the reason why I was able to, in a very trustworthy manner, take buys in this scenario. But part of that trust came from what I just mentioned here. And of course, the fact that the breaker got traded through, basically, invalidated on the weekly chart, right? Traded through it. The breaker here got taken out, right? And it also changed state of delivery here too. So on this weekly perspective, the same principle that we use for the order block being turned on and validation levels that we would be observing translates to also the weekly perspective as well, right? It got above this. So what is my objective? We have a failed weekly bearish breaker. We have another change in state of delivery now after a stop run. And so as long as it comes back down into it and respects that 50%, I'm good to continue to seek buy-side liquidity, right? And then if that was to be taken out, then we would switch, and then we would start doing the same thing the other way. So I guess in a way, what I've been talking about the last 15 minutes, or, I don't even know how long I've been talking about the order block idea and some of the different quirky components, but hopefully you guys can start to see how this is actually beneficial as well when it comes to validation and invalidation, for whether a change in state of delivery is going to be something you want to trust, or if it's something that, may be a little bit more sketch and you may need to wait for a little more information. Okay. So yeah, let me know in the chat if all this stuff makes sense so far. I think we've had a pretty productive educational hour. We've talked about a lot of pretty important things. Not like 1,000 topics, but, a couple very important things that you should really lock into. All right. So it seems Fritz doesn't have any questions. I think I got, about 8 people on. I would like to see if any of you guys have any questions. I know that Fritz isn't the only one that's able to type, right? Or maybe has a question or something that he may want to discuss. I know that there's probably a couple of you guys that may have questions. Remember, this call, I was debating on jumping on a call today, but this call is specifically aimed at answering questions. So, at this moment, throughout the rest of the call, obviously, it's going to be based on your guys' questions. Otherwise, I'm just going to go through the markets and then we'll be done. So yeah. So I heavily encourage you guys in this call to ask questions if you have them. Okay, I'm done. Fritz. All right, we're done. Fritz is done. We're going to end the call. Yeah, Tony, my pleasure, bro. I appreciate you always hopping on. I appreciate all of you guys that support the channel continuously. Don't forget to like the video, subscribe to the channel, by the way, if you guys do get value. It helps me get in front of people. It helps the algorithm and YouTube know that we're worth listening to. And, we're talking about things that should be talked about, because this stuff is extremely powerful. And this year, for the first time, I proved publicly every single week, twice a week on YouTube, but then, just every day like I normally do in my private group, that what we do is definitely up there. I'm not the best trader, but what we do is repeatable. It's simple. There are different components to it that can make it more advanced, to make you more lethal. But, you shouldn't expect yourself to know everything that I talk about on the first day or even the first month. You get a good idea over the first year because of how I teach the stuff, what I tell you guys to focus on, whether it's ICT's videos himself or things that I recommend, that I've literally seen help traders get better faster. I have a lot of students, and over the years I've worked with over 200. And through those 200 students, you can imagine that I've learned a lot as far as like what works, what doesn't work, what helps students learn faster, what sticking points are present, and then how to overcome a lot of those issues. So, that's a benefit you guys get. ATM, good morning, by the way. ATM, appreciate you hopping on. What do you think about bond market and seasonal tendencies for January's price action? So yeah, let's go see. I think I have a seasonal influence for the bonds. Actually, let me pull that up. See if I can find it. Yeah, I do have it. I have one for the bonds specifically. So yeah, I'm not too sure why the 5 years not there, but whatever, don't matter. So yeah, the bonds have this decline. To start the year, the bonds have a pretty significant decline. Doesn't that look kind of familiar or sound kind of familiar to what the indices do? Or what they should potentially do, right, seasonally? I think that's a pretty interesting observation, wouldn't you agree? Just kind of goes back to the fact that the bonds dictate and have a heavy influence on what the foreign currencies do and what the indices do. Not only technically, but also fundamentally, right? There's an impact there too in that realm of things when it comes to that relationship. So I would, essentially claim that we may see a very similar thing take place. The only issue with November to January's price action is the fact that there's cracks in correlation, right? It's heavily cracked because, people are on the sideline. It's the new year. There's lots of things on the back end that disrupt the precision elements fundamentally. So, you want to take everything with a grain of salt when it comes to making opinions on what January is going to do overall. You want to be very flexible. You want to be flexible all the time, but especially around these times, like the start of the year. Remember, Power 3 is taking place. So if it's bullish overall by the end of the year, the start of the year should give us some type of decline. And it's pretty interesting. If you take this whole yearly price delivery here and you take the 40-year marker, you map out the open price. I mean, you could even just use the open price here. Can't you see accumulation, manipulation, distribution? So this is something that you want to consider too. So even when you're looking at seasonal influences, you got to also consider that Power 3 is taking place. ATM, I think you joined a little bit late. I did give the website that you can go to use that ICT recommends, that I recommend. It's called mrc.com. He is the best. I don't give a shit what anybody tells you on the internet. I don't care what listen to me. I don't care what anybody says on the internet. I have tried so many seasonal influence charts, and over the years, I've looked at them. ICT has also kind of reinforced this. He's also mentioned something similar to this, that the MRCI's stuff, right, is much more accurate long-term and real-time, month to month, than anything on the internet. Okay. And I've looked at studies on my own, in my own studies over the last 20 years of data to prove this, cross-referencing his versus, 5 others. And he's the only one that I will recommend. I don't recommend anybody else. Off the simple fact that I've went in and done the work. I went in and cross-referenced and looked at things, spent hours, months, years at this point, double checking to see if, which ones are the most effective. Because again, remember, like I said earlier, I had a problem when I first started with not having certainty, and my whole shtick, right? My whole development process has been surrounding, what elements I can use to build that confidence, to build that certainty to a degree, right? Because you can never be 100% certain. But, to a high level, I believe that the things that we use, the way that we use them, has been able to achieve at least a pretty high level of certainty. Not perfect. I can't guarantee that. Nobody can. But, the charts and what we do on a weekly basis, the call outs that go straight to where I say they're going to go over and over and over, week to week, month to month, quarter to quarter, now year to year, I think it speaks for itself, right? It speaks for the concepts. Our Fed cutting rate or hiking rate. I think you're going to have to go to Google and probably search that up. I haven't really looked into it yet for the next year. I'll be probably doing that soon, but you just simply, search up on Google. What is the expectation for rates in the United States? And I'll probably do that later, to get, a view for myself. And you also want to go through, as you do that, you also want to go through the economic calendar, take a look all the way to the end of the year, and then kind of note, when rate cuts could potentially form. Or, if you don't want to do that, you could just simply go week to week and just try to observe when the rate cuts are going to happen and when you see things talked about in the news. But yeah, hopefully that answered your question about how to find the seasonal tendencies for all markets, not just the bonds, for all markets. It's going to be at mrci.com. I'm not affiliated with him, just like ICT's not. He just has the very best stuff, and it's very reasonably priced. It's worth investing in someone that's giving a tool like that to us that, again, is provably effective. It's provably helpful. While people talk crap about seasonals on the internet, at the same time not knowing anything, you want to make sure you're able to ignore them. And this tool, I'm telling you, from this resource, if you do the back testing and aren't lazy, and you do what I said, how to do the back testing on it, like I said in the earlier portion of this video, you will see pretty dramatic benefits from it, and you'll start to appreciate it a whole lot more. Okay. So yeah, thanks for the question, ATM. Is that really the only question you guys have? One from Fritz and one from ATM. So yeah, I guess that's it. So yeah, if you guys got questions throughout this, just let me know. But yeah, looking at the bonds here, I do believe that there is a chance for us to get down to here still. I've had this eyeball here for the last couple of weeks since we broke down after the rate cut here. I'm not too sure why the bonds ended up tanking off the rate cut, but hey, again, it's been a cracking correlation. There's been a lot of messy stuff happening, and we basically broke down below this. We broke down below this as a low resistance liquidity run. You could see that behavior there. Why is it a low resistance run? Because there's a failure swing here, and it was coupled with a fair value gap, and it just decided to fail this. We see the wicks being respected up here, and price basically targeted the sell side liquidity, but then also the fair value gap, right? Came down and revisited that once more. We're also inside this monthly bullish order block, so that's interesting. We'll see if it fails. I'm assuming that it'll probably fail potentially. We have trendline liquidity down here as well. Let me pull this up a little bit. We've got some pretty large trendline liquidity down in this area. So I wouldn't be too surprised if eventually we get down there. We have had this rejection here. If you take the order block idea that I talked about, how to observe them for verification, you see that prices bodies of the candles couldn't close beyond that 50%. So this order block is in place still, right? And then of course we see the run above here. We got the breakdown, shift in market structure, right? Pretty solid change in stated delivery to the downside. Broke down below this one, broke down below this one, swept the low here. And now we got a bearish breaker as well. So we're going to need a lot for us to get back in line with this going higher. It's going to have to, in my opinion, get outside of this weekly inversion for value gap and disrespect this whole entire breaker on that weekly chart. I need that whole candle to get violated. Okay. Let's see, purple. I got a question actually to you guys, if you guys can help me out with an opinion. So what do you guys think of the idea of, instead of coloring the boxes specific colors for specific time frames, like purple, for example, is for the weekly chart, pink is for the monthly chart, blue is for the daily chart, instead of having the entire line or box or tool being the color plus the text being that color, what do you guys think of like the idea where if I have a bearish PD array that I'm looking at, I turn that red, and the bullish ones, I turn the box or line or whatever green, but then the letters in the names of whatever the item is, right, a breaker, order block, daily high, or whatever, change the color of the words, right? So there's not a lot of different colors all over the chart. It's just the wording is the different color. What do you guys think about that? You think that would be a little bit cleaner, a little bit better for you guys? Because I have a lot of things on the chart a lot of the time, just so I can make sure you guys aren't missing things that I'm trying to point to. But what do you guys think of that idea? So it'd be kind of something like this. Right? Could be a monthly order block, and I would basically turn that green. Maybe not so bright on those. What do you guys think of that idea? What the hell was that? That was crazy. Scared the crap out of me. Yeah, let me know what your guys' opinion is for that. One color for bearish, one color for bullish. Makes a lot of sense. Okay. Yeah, and then the names are the color of the time frame. So purple is for the week. Pink is for the month. So it'd be like a green line if it's a bullish monthly order block, green line with a pink lettering. Just so the colors there isn't so many colors. From higher time frame, lower time frame, the color is standard for bullish and bearish. It follows easier. Okay. If it's a breaker or FVG. Oh wait, if it's a breaker or FVG or order block, your wording can then be any color. Yeah, okay. Let me see. Since I started watching you, my trading strategy changed over time. Thank you. Yeah, hey, no worries, ATM. I appreciate the support. You weren't here, I don't think, for the whole year. So I'm grateful that you're saying that your time here has been of value. And this is why I go live, even if there's not a lot of people that hop on. We're not very well known. There's not a huge audience. Even if I could help one person change their life from trading, or at least get them a skill set, a deep enough skill set so then they can go ahead and figure it out on their own, because now they have a solid foundation, so they can build upon that. It makes it worth it. It makes every minute I spend worth it, even if it was just one person. So again, and there's so many people on the internet, the fact that you guys come here every week for the most part and spend time with me, hours with me and listen to my opinions on these things. It definitely is something I value tremendously. And especially when you guys are sending me your like the updates and saying comments like that, like since I started watching you, my stuff's changed for the better. That stuff means a lot to me. That's why I started this channel. That's why I post things. That's why, even though it's not that big of a community, I still come on faithfully every single week, and try to put as much value out as I can. Just I like seeing the progression because it makes me think of when I first started and how exhilarating that was. And if that's a blessing that you can share with somebody, knowing how it felt when you first felt it, I mean, I think that's a very admirable thing, and it makes trading more than just about you, so that's why this channel was born, you know, and then, working closely on a one-on-one basis with students. Obviously that's, you want to make sure you're around serious students. So that's where my private group came in. That's not to say that everyone on YouTube is going to be unserious, but most people unfortunately are. And I saw that pretty clearly when I was teaching, doing one-on-ones for free. Had so many people trying to have me help them, and it didn't seem like it was very appreciated. And there was a lot of just nonsense that I was not trying to deal with anymore. And then my students told me, make it a private, more exclusive group for those that want to, be on a one-on-one basis, but continue to put value out like I do here on YouTube. So there's two different lanes that you can hop in, but still get a lot of value from each. One's just a little bit more involved, more handheld, and more frequent. I'm like I said, live every day, even on holidays with my private group. They get something every single day. So yeah. So I appreciate you sharing that with me, ATM. Appreciate you. I appreciate all of you guys, and I'm glad to see you guys are improving. But yeah, I think going forward, this is what we're gonna do. I think maybe I'll keep the wick measurement quadrant thing with the what is it, the fib? I was just running a blank. What the hell? I'll keep that the same color as the time frames. What the hell is going on? But then I'll just change this. Is this a good enough color for you guys? Like, it's not too bright? It's not too dark? What do you guys think? You guys should be able to see things very clearly. I have it on 4K today. So hopefully you guys can see all the words and whatnot. Everything looks crisp. Yeah, I'll probably start to change this. So that is a okay, good. All right, I appreciate the feedback, Fritz. So I'll just start doing this then. Change it to green real quick. Yeah, I'll probably go and do all that later, so I don't take up time with it right now. But yeah, I think that'll be something that's pretty helpful, hopefully. I appreciate the feedback, you guys. So yeah, when it comes to this, like I said, unless it breaks out beyond this weekly bullish fair value gap, which is also now an inversion, unless it gets outside of that, I'm not going to really assume that this is going to be bullish. I will just assume that we're probably going to take it lower again. and we'll see what happens from there. Right, we're inside the midpoint of this. Got a lot of wick rejection, so that's beautiful. So in that case, we will look to see if we can't get it to go lower. Okay, and then that may have an impact on the currencies and the indices as well. We're just gonna have to see seasonally that's supported for price to go ahead and do that. So yeah, if we come over here, let's kind of take a look at the lows in here. Let's see, is there any SMT? So, I don't necessarily see much SMT here on this. So I think we'll be safe to just move to this. So if we look at the yields, remember this is what DXY is impacted by. We have trendline liquidity up here. Okay, on this monthly chart, we did take out this. So this is a weekly bullish order block. Okay, let me go change the color to green. So it's a weekly bullish order block there. Or wait, no, it's a monthly. Whoops. Let's see, is it on the weekly too? Let's see. Just use the... Save that real quick. All right, so yeah, with that being said, if we see the bonds go lower, I would be assuming that this will probably look to go higher. Okay, so we'll see if this can essentially hold beyond this, you know, come off of this. We do see a fractal low that formed here. We got wicks respecting, or the body's respecting the 50% of wicks. It's also this weekly bullish order block in here. So weekly bullish order block, monthly bullish order block. Yeah, I think I'm already starting to like this a lot more. The color scheme, I think I'm liking that a whole lot more, honestly. And if we go to and then I can have like inversion fair value gaps be like gray or something. This can be bullish. Make that. So yeah, if you do the labeling like this, the way that I'm doing it, you'll kind of see what benefit that has. It keeps it all together, right? So then when you're looking to make these templates like this, if you put a number before it, it drags it to the top. And then if you can, of course, put bullish or bearish, it'll basically put them right next to each other, and you can just kind of flip through it so you don't got to keep looking for stuff. Okay. So yeah, just a little tip there. And of course, we got the quarterly. I think I'll keep the quarterly stuff really, really obvious. So yeah, we'll see what happens in here. But yeah, as long as we stay above this, I did mention that if it got above here, we now have this high to that low. All of that should be able to behave as a balanced price range. So we should be able to see this fair value gap, not even allow for price to come too deep into this if it is going to go higher. It may consolidate though. That's January, right? The start of the year. We may not really do much. You know, it may just be a kind of chaotic next month. Does that mean there's not going to be any opportunity? No. Does that mean that we should not take a trade at all? No. You know, unless you don't want to, because there's no real urgency to do so. There's going to be better times of the year to trade. And, you know, just keep in mind that November to January, like the last week of January, is generally a bit of a chaotic mess because of all the back end stuff. Again, that doesn't mean that every year there's not going to be any good opportunities around those times. It just means there's a higher likelihood that it's going to be a bit chaotic. Okay. So be cautious and cut your risk, simply. Okay, so with that being said, we're going to look and see if we can't get this to bounce and get, you know, beyond up to the levels up here. Go to the daily chart. That's a daily high. We got a low, high, lower low. So this is actually a bearish breaker in here. Did we reach into it? We almost reached into it. Pretty damn close. But again, this turnaround in here, we're going to have some dramatic repricing lower to support this holding price to the downside if we're going to go lower. But if the bonds go lower, the yields in this case, they should be able to trade this high to that low as a BPR. Maybe it digs a little bit into it, but nonetheless, we also have this monthly bullish order block too. So if that's a monthly bullish order blocks are balanced price ranges for the most part. So again, 50% should not even be attempted. And we would rather see it pretty dramatically accelerate up above these targets up here, or at least to those targets. Okay, so that's my opinion on this asset. We also have a quarterly bullish order block, and you can see how sensitive that is. So it's like a 3-month bullish order block, and you can see how it's been used for long, long time, from this to this to this, right? It kind of inverted a little bit. Hit the weekly bullish order block, then we got back above this again, and then it responded again. So higher time frame's king, you guys, I'm telling you. So yeah, that's my opinion on this asset. We'll see if that changes, but for now, we're going to look and see if we can't get this to move up to, you know, around this area up here, maybe even blow out this, and then eventually maybe it comes to target these equal highs up here. Yeah, I'll make more templates later. But yeah, moving along. Well, if we pull up the monthly chart, weekly chart, and the daily chart on the DXY. Again, if we're going to see the yields potentially go higher, that would be a pretty positive thing for the US dollar. We may see it recover if that's the case. For now, though, I'm going to need a lot of evidence that this is going to go higher. We honestly have a lot of nastiness going on in here. Okay. Like we have this quarterly. I think I'm going to keep the quarterly levels. Oh, wait. Whoops. Let me refresh real quick. Close that. I think I'll keep that there. And Okay, so we got the quarterly low, we got the weekly bullish order block. We're really respecting that order block. If you look in here, it's kind of closing above that, essentially. Let me change this to green. Make that a orange color. Move our previous week's low. As always, you guys, when you look at the chart, the first liquidity pool you got to pay attention to is the current high and low and the previous high and low from the previous candle. If you're on the monthly, weekly, or daily chart, that's the first thing you're looking at. All right, the current candle and the previous candle, or the previous 3 candles when it comes to the daily chart. And all of that's encapsulated by the weekly candle as well, right? Those are your near-term liquidity. And then you look for PD arrays that are in close proximity, right? Whatever one you can see. You use wicks, you use order blocks, lows like this that are close. That could be reasonable if it does want to target lower prices. That would probably be a part of the equation if price was to attempt to get down to here. But before this is even considered, we got to get through some of these other levels too. We have this large wick. We have the quadrants in that. We have the low and the quadrants within this quarterly fair value gap. So all those levels can be looked at as targets day to day, week to week. And yeah, so that, of course, that's how you kind of anchor yourself to what liquidity is important and what things you should be really putting your attention on when it comes to liquidity and potential draws on liquidity, like PD arrays and whatever the case may be. All right, so we'll see if price wants to, essentially, is it going to hold this, or is it going to fall in line with the yields if they end up going higher by basically running up above this high? If we get up above this high, my attention would then look to see this as a market maker buy model, right? For now, we're in a potential market maker sell model, okay? It's delivered buy model here, sell model here, sell model here, sell model here, right? But that all those little, portions of price delivery, they're also inside this larger potential market maker sell model here. Okay? So, and again, we're reaching into levels that we got to observe a reaction from. Is it going to dramatically reprice from, say, this wick in here? Or is it going to break through and invert these levels and then look to see a little bit of higher prices relative to the yields going higher and possibly seeing the bonds go lower? Okay, so we're at a moment where we're going to have to observe and see what it's going to want to do. And if we take it from this high extreme down to the low extreme, equilibrium is right there. So let me actually mark that level off. Pull up equilibrium. Right, so that's the monthly equilibrium, you guys. So now we're kind of hanging around close to it. So what do I always say? Let me know in the chat. When we're on a higher time frame and we are trading into or around equilibrium on a larger range like this, what does that generally lead to when you're looking at those smaller time frames or day-to-day price delivery overall? What does that generally lead to? What characteristics can we expect? Consolidation, low probability, not really any follow through. Okay. And how many times have I said this, Fritz, throughout the last couple of months? And how many times has the same characteristics unfolded relative to that? going sideways, not really doing much until it breaks out. How many times has this been correct? Or has this assumption shown to be a valid assumption for conditional awareness? How many times, Fritz? Let them know in the chat. Exactly. Every single time. Every time we identify it this way, the same thing happens over and over until it breaks out and opens up and like a news event gets us out of it. Okay? So it's every time. So every time you have to think about these things, right? You're going to always want to consider these things because it helps you gauge your risk. That's the most important thing. It helps you understand what the condition could be, what you should expect, and how you should manage your risk. And in that case, you should cut it by at least a quarter. If you're more aggressive, right? If you're more conservative, cut it by half, or whatever your normal risk is. And I'm not a mentor that'll tell you guys, oh yeah, use this amount of risk, because it's different for everyone. What I use may not be something you're comfortable with using, and what you use, I may not be comfortable with using. So maybe it's too low, maybe it's too high. So it's a very unique thing to each of us, and yeah, just kind of depends on what you're comfortable with. Okay, so yeah, with that being said, looking at price, we have a monthly high here. It's also a weekly high. And again, we're below this monthly fair value gap. Is that red? Yeah, okay. So yeah, it's below that monthly fair value gap. So we will see if we can hold below that still. If we get up above this, and if we end up taking out the swing high up here, if you think of the 3 PDA rules for validation of a trend, that would be where my antennas go up and potentially adjustments kick in to then try to look at this then as a market maker buy model, and then try to frame things going to the buy side. That would then result obviously in a bearish influence on the indices and the foreign currencies. But again, we're at equilibrium, so it's the start of a new year, start of a new power 3 for the yearly range. So we're going to have to see how this first quarter ends up unfolding, and what surprises happen in the U.S. In our government. What's going to impact things, and what are the rates going to do? Who's going to be the new Fed chair? What are they going to be doing? All these things are going to have a big impact next year because there's a lot of changes still coming. It's been a lot this year. So, let's continue to expect that changes are going to keep rolling out. So be cautious, okay? But yeah, this is essentially my opinion here. If nothing changes, then this will just continue to rage lower. Like if we keep this high available, if we can't break outside of this quarterly fair value gap high, I will just continue to want to see if price can continue to drop. We got this down wick on this daily chart, so that is going to be something that we want to monitor. Let me actually add this to that. I guess I'll just slowly add to it as we go on. All right, and yeah, we got this volume imbalance, so we'll see if it can respect that. We got these up candles here. If we go to the 2-day, you can get a little bit more clear picture of this order block. So as long as that 50% stays intact, it's also ironically the equilibrium of that monthly range from this low to that high, right? Or I mean, I guess it's more of a quarterly range, huh? September to November. Yeah, it's like a fourth quarter range. Overall, that's kind of the range that we're inside of, though, and where we're at. So yeah, we'll see if it breaks outside of that. That may give us an early sign because this is an order block on that like 2 or 3 day chart. So that could be an early sign. And then once it breaks above this, we'll have fair value gap, volume imbalance, wicks being violated, equilibrium getting traded above, high being broken if it takes out that high. That'll be all the reasons for me to then want to adjust and look for buy side delivery. Otherwise, this is simply a run on stops, shift in market structure, continuation to the downside, accumulation, manipulation, distribution, and then a rebalance to second distribution, within this accumulation, manipulation, distribution phase here. Okay, so that's kind of how I see this, right? Had a similar thing here: accumulation, manipulation, distribution, redistribution or redelivery, and then redistribution. So it's happening here as well, right? And each little piece has its own accumulation, manipulation, distribution. Let me see. From your weekly call to even lives on Tuesdays. Yeah, it shows up every single time. Yeah, things that we talk about on these calls, every time we go live, for the most part, it eventually does what we say it's going to do. And if we're wrong at some point, or it goes or does something that we're not expecting really, which is very rare, we're able to then make those flexible adjustments. So I would agree, every week these things happen, from the equilibrium behavior to, where we call price, how it's going to get there, when it should get there, what other markets should do at the same time, so on and so forth. Is DXY holding a 6-month bullish order block? Oh yeah, that's a good way to look at it. It looks like it did hit a 6-month order block. Very interesting. So yeah, if we were to get like displacement from that, that would be very interesting. Remember, only 2 of these candles can form per year. So we can't think, oh, well, it's going to get up here, right? It would just be like, all right, well, where's the next 2 candles going to go? If we think like too deeply like this or too far down the line, it may be a little counterproductive, build a false expectation. So we just got to simply think, okay, well, there's this high and that low for the last 6 months. This next candle is going to either have to take this high up here or take this low. What can assist us in that? Well, our observation here with this range in here, that can assist us in gauging whether the high is going to be taken or that low is going to be taken. If it displaces and breaks up above this high, it's probably going to look for the next 6 months to target this, potentially, right? And if it breaks down through this and then we start to target the lows down here, we'll end up seeing the continued sell-off, especially if the yields go lower, right? I think the yields are going to be very impactful. Interest rates this year are going to be very impactful. All the cuts and economic things that happened this year in the U.S. economy, it's going to ramp up dramatically because of what Trump has done to supercharge the economy. It takes a while for the implementation to take place and then the effect to take place when it comes to economic policy. And the stuff that has been done has already started to be felt in the United States. Not in blue states, because they're trying to Trump-proof everything, make it so nothing he does has an impact on the people that are positively impacted by the changes. But we'll see what happens. I think things are going to really ramp up, and red states and states that are allowing this stuff to unfold, they're going to start doing very well. And eventually, the whole country hopefully is going to have to fall in line with the positive things that are happening in the economy, based on what he's adjusted. The new Fed chair is going to come in, so new things are going to happen there. So we will see. All of that's going to have an impact on this, right? And then how things operate. But we're going to be here every step of the way. Same thing that we did last year, we're going to do this year. Just get another year of dynamic call outs and evidence that what we do here actually works. And hopefully I can get a lot more success stories. You know what I mean? But yeah, so this high up here is going to be determined, if it's going to be taken, it's going to be determined by how this stuff is respected or not. And we're at equilibrium. So again, it could also consolidate. But if it stays below that and displaces, right, getting below this, we may target the deeper levels down here. We have these levels the target. I would assume that given what we see here, that is the case for now, unless price displaces above this, right? Because then that would change the whole overall view, because then we would start to have multiple PD arrays violated in this instance, right? Notice how in this instance, it kept going lower, but then once something changed like this high getting taken, which is similar to this one, things started to unfold the other way. We called this when this was respected, right? When the inversion was delivered. You can go back and look at the replay where we talked about this and see how we basically called all of this too. So yeah, it's going to be a very similar thing in here, right? Unless this is taken, we continue to go lower, okay? And then we'll monitor what the yields do and what the bonds do as well. And what that 6-month order block reaction is going to be, that's going to be basically determined by, determined in an early fashion or with a more certain fashion by seeing how this is going to be treated on this time frame, okay? Would you call the current bearish range sell side of market maker sell model? Yeah, I kind of pointed that out, how we're overall in this range. It's basically creating a market maker sell model. If it takes this out aggressively and inverts this, then we'll see a market maker buy model, which would then align with the 6-month high being taken out later on throughout the year. And so that would be the mode of delivery overall. So yeah, you're right, Fritz. But now we're inside of the deeper portion of a market maker sell model. So again, that's why I'm not really going to justify this as a area that price will stop at the moment. We'll continue to monitor this as a sell side portion of a market maker sell model, but just keep in mind that this is definitely, if we close above it, going to be our invalidation level using the 3 PDA rule. Okay. And then that could turn into a bullish breaker as well. And then this high to that low would be a balanced price range. And then we could just use the mid portion of that to continue to trust that it's going to go higher or not. Okay, so let me know in the chat if all this stuff makes sense so far. And don't worry, Fritz. We've talked about a lot of things, and you've been engaged, so it's understandable. But yeah, so okay, Fritz said it makes sense. Tony said it makes sense. Okay, beautiful. Okay. So yeah, with that being said, we will move on. George said it makes sense too. Okay, good. So yeah, we'll move on now to the indices, and then we'll kind of put a ribbon on it. Okay, if we pull up the 3 indices and we go to the weekly chart, we could still see that bullish order flow is still intact. We do have SMT at the highs up here. The Dow created a SMT. For those of you that have been with me since last year, we had a very similar situation like this happening, where there was a higher time frame SMT forming in the NASDAQ and the indices. And then that's when Trump started talking about tariffs. And what happened? The market ran down thousands of points all the way to the yearly order block, where we eventually called the low. So we actually called the high last year and the low. The high off the heels of a SMT at the highs to start the year, considering Power 3 and all the stuff that we've talked about just in this call. We talked about the same things last year. We did the same process last year, and it served us well as price looked to dip for the manipulation or consolidation manipulation phase of the bullish Power 3. So we'll see if they want to do that this year. They may not. Hopefully there's not, as much craziness. But even if it does drop down, we're expecting that potentially to take place anyway. So this SMT would just further amplify that belief that the SMT is going to lead to that consolidation manipulation portion of the yearly range next year. So we got to keep tabs on that. Something I do want you guys to think about is this low, this wick, this order block. So if this low gets taken out, this midpoint of this wick gets taken out, the fair value gap in here gets violated by doing so, and then we close below the order block here, that would continue to send us lower towards the sell side. Otherwise, we're going to continue to see this go higher. All of that would be supported by this SMT and the manipulation phase of the yearly Power 3. And then, of course, where would my objective be if that is the case? If it does take place in that way, we would then target this for long term, and then this could act similar to the yearly bullish order block, setting the low of the year. This would end up being the anchor point for the potential, low projection for the yearly range, assuming that's going to be a good year, right? And it ends up being bullish. But then we could see, drop down to there, hit that, and then maybe something comes into play or seasonal influence comes into play mixed with some headlines and whatnot. That could end up sending us back to the buy side again, like this year showed us from that yearly order block. Okay, and until this level is violated, which would encapsulate the low, the wick, the order block, and the fair value gap as our validation levels, unless this is taken out, I'm going to continue to want to assume that we're going to keep going higher. We got to think of power 3 though, so we may see something dramatic take place. And if that does take place, this is how we can confidently allow ourselves to get in line with a bearish move and then target this, the wick, these equal lows, and then eventually this down here. And then if we were to blow past that, that would be pretty interesting. But then I would try to target something like this and, stuff like that. So yeah, again, think yearly power 3. Okay, so don't be shocked if we do end up seeing price decline. We're anticipating that potentially being the case if it does want to do so off the heels of the SMT here. But if nothing supports that, like price breaking down, closing below this up candle, trying to aggressively attempt to get down below this, we have really no reason to try to assume shorts. It's just continuing to go higher. We got an order block here, fair value gap from here to here. So the high up there is significant. Okay. What do I want to do here? Let's go weekly. So weekly volume imbalance. Honestly, I don't think I have anything against that color, actually. It's a type of green, and it's different because it's a volume imbalance. Yeah, I think I like that, actually. I think I'll keep that. Okay. So we got that weekly volume imbalance. It's also part of the order of the fair value gap. So basically can be encapsulated as a bullish fair value gap. So yeah, we'll see if it can stay above that. And as long as this low stays intact, as long as we don't really attempt to get down here in any meaningful capacity, as long as we stay above this overall gap in here from this high to that low, as long as we stay above this weekly bullish order block like we are doing now, I will continue to want to seek buy side. We got equal highs up here. We got the regular trading hours gap that I've been talking about nonstop for the last couple months. This up here, right? There's no buy side in there. In some cases, there's no sell side either. Specifically, the gap in there, right? So that is my draw on liquidity overall if this buy side delivery continues. Okay, which again, I assume is going to continue. There's going to be a pretty big change next year. Apparently, there's going to be 24-hour trading during the week for the indices. So the new day opening gap may not really be any visual representation of anything. The price levels, though, are going to absolutely still be dynamic. So don't disregard that. We just may not see a gap anymore as the sessions end, because that was something that passed already. So that's going to be a change. So it's going to mean more liquidity. They're not changing the algorithm. Let people believe that they're changing the algorithm. Okay, you're going to see a lot of crap being talked about. ICT has mentioned this. a couple times. He knows that this is something that has been part of conversation. And what I just said is what he told us to do, right? Just remember the price levels. Even if the gap's not there, it's still going to be used. That price level, right? That little range that's created at the end of each session at 1:15 p.m. Pacific Standard Time to, I think, 3 p.m. Pacific Standard Time. Okay. Because there's like that little gap or whatever, that 1 hour gap. All right. Or wait, I think it goes from 1 gap and then 2 o'clock. So yeah, 1:15 to 2 p.m. Sorry about that. PM Pacific Standard Time. Right. So just note that in your notes so that when this does unfold, you remember what the gap was. Even if it's not there, the price levels will matter. Okay. Just wanted to get that mentioned. And yeah, so for the most part, I don't really see much more to really dig into. We've talked about a lot today. All of it is supportive ideas to this, so it just makes it way easier when you go onto this asset, right, or these assets, to then assume what's going to happen potentially with a pretty high degree of accuracy, right? Here's the fair value gap I was talking about. We could see it being shown on the indicator. Okay, so yeah, we'll see. We'll see what happens in here. Go to the daily chart. We can, yeah, we see the lows in there. So these lows are important. As always, like I always say, the most important liquidity pools are the current high and low, previous high and low, any close proximity highs or lows, right? Like this here, or even this eventually. We're pretty close up there. And then the PD arrays that are in close proximity, like what we've mentioned already. The volume imbalance, the any gaps that you see like this, right? That's going to be something important to note. So bullish. It's basically an inversion fair value gap. So we'll just look at it as a bullish idea. So yeah, as long as you stay above these levels and this low, this is that wick I was mentioning when I was on that higher time frame. As long as this stays intact, as long as these levels continue to support price, we have literally zero reason to think that we will not get up here. And that changes if price does start to open up and really ramp down to the downside, because then we may be set for the manipulation phase or in full swing of the manipulation phase to then reach down for a significant level like this. Maybe even simply this to sweep that out, target these guys, and then just, continue to rage. It may not even ever come back down to these levels, so it may just do like a small drop lower, tag into this, and then just continue to hold inside this. So it just really all depends on what we see in the moment as the year begins. Okay, but for now, my assumption is going to be that we're going to continue to see this hold and look to want to get to the buy side again. And what targets are there? Like I mentioned, the current high and low, previous high and low, previous week high and low. Okay, order block here, fair value gap in here. As long as these levels gets respected, we'll be aiming for the highs, the regular trading hours gap, and then maybe even basically this high and beyond, right? Depending on what happens, okay? So yeah, and then gold. Gold is going to be continuously looking to attack the buy side. I'm not looking for really much of anything to change. We may get something like this take place again, right? In the face of this, I was still calling buy side. I think me and Tony had a conversation about that, and everything that we basically painted from this low beautifully remained bullish. Right, so we called gold this year just as accurately as we have called the NASDAQ and the other indices and the bonds and yields and DXY and foreign currencies. All of them we have called with a high degree of accuracy week to week. And gold is going to be something I talk about a lot more this year. I'm probably going to trade it a lot this year, just simply because I love how it's moving. And I should have taken more than one gold trade last year, aside from what I already do, because it was amazing. And the one gold trade that I did take, I showed publicly, and I made $4,500 on it. Right? Ironic that we reached 4,500 to end the year. Pretty interesting, right? And again, that's something I showed live. So yeah, and it was on a Sunday. Can't forget to mention that. And I never trade Sundays, so I was being a bit ballsy. But yeah, and again, I showed that when it was taken. So yeah, I'll just continue to see this march higher. We'll continue to just have the same objective. Again, the most recent high and low, previous high and low, any close proximity PD arrays. And in this case, we have extension levels that could be reached into as a target because we're in basically no man's land, highest it's ever been. So because we're at all-time highs, the protocol to trade at all-time highs is we don't pick a top and we look for moments where price retraces to hit a logical level of PD array or liquidity like this, and then try to see if we can't get like another order block to form, and then try to position around order blocks, inversion for value gaps, everything going to the buy side, unless of course it really falls off the face of the earth and starts to really show us otherwise. I don't think it's going to show us otherwise. I think this will continue. Maybe a retracement happens, but so be it. Okay, so yeah, with that being said, I think that's pretty much all I wanted to discuss today. We talked about a lot of things, and hopefully you guys got value. Hopefully you guys have had a good week. This will be our last live weekly prep call for 2025, and it's been an amazing year. Thank you guys for all the support this year. Hopefully next year we can continue to grow, continue to make an impact on people's trading, and hopefully we can continue to keep this community positive, progressing, and constantly looking to help lift each other up, rather than the traditional vibe on social media, which is just negative, selling fake dreams and a bunch of unrealistic BS that should be ignored, right? So you guys are helping me every day on that mission. So again, thank you guys for all the support. God bless each and every one of you. If you guys have any questions, you could just simply DM me, and I'll get back to you whenever I can. Don't forget to like the video, subscribe to the channel, and yeah, this will wrap up 2025's weekly prep calls. Okay. So again, thank you guys. Thanks for, yeah, you're welcome, Fritz. All of you guys are welcome. I appreciate you guys just as much as you appreciate me. So the feeling is mutual and always will be. Okay. So yeah, God bless you guys. Let me know if you guys need anything. Don't forget to like the video, subscribe to the channel, share this community with anyone you think can benefit. And yeah, I will talk to you beautiful people on Tuesday. Have a good rest of your day, you guys.